Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Friday the 18th of December 2020. The time is 5 to 5 in the morning, GMT. European session coming to a close, European session starting, Asian session coming to a close, and North American session our lunchtime. Now just a quick update on our positions. We closed out all our pound long positions, all our whole positional trades, 38 of them yesterday, about half an hour prior to the Bank of England rates decision. And we had a net profit of 4,295 points. Excuse me, that made you cough. Right, well, obviously those trades dated back pretty much a quarter of a year, about 12 and a half weeks. The initial entries of those were made. So that was our positions closed there. So we're not in the pound. We've just got swing trades running in the dollar yen and the euro yen to the long side. So all that will be explained in detail in the weekly review, which comes out on Sunday. So let's make a start today anyway. So yesterday, which was Thursday, so this is Thursday, what was it, 17th of the 12th. These were the flows then. So we had dollar yen on the negative, pound euro on the positive. The euro was plus 108, the pound was plus 104, the yen was minus 29, and the dollar was minus 183. So we've got a negative opposed driver in the dollar, a negative rock in the yen, positive excuse me, mover in the pound, and a positive secondary driver in the euro, and that was plus or minus 212 activity. Right, intra week. So what's happened so far this week? So that's from Monday the 14th of the 12th open to about 20 minutes ago. We've got dollar yen on the negative, and we've got euro pound on the positive. We've got plus 289 on the pound, plus 123 on the euro, and minus 74 on the yen, and minus 338 on the dollar, and that's on an activity of 412. So we've got a negative opposed driver in the dollar, a negative rock in the yen, positive mover in the euro, and a positive secondary driver in the pound. So let's just finish off with what's happened today. So these are intraday flows. So that's Friday today, the 18th of the 12th, open to about 20 minutes ago. So these are most recent flows. We've got pound yen on the negative, and we've got euro dollar on the positive, Right, so we've got plus 105 on the dollar. We've got plus 16 on the euro. Minus 43 on the yen. And minus 78 on the pound. Giving us a positive opposed driver in the dollar, a positive rock in the euro, a negative mover in the yen, and a negative secondary driver in the pound. And that's off activity of plus or minus 121. Oops, plus or minus 121. That's the activity. Right, so let's make some sense out of that then. So yesterday we had an opposed negative driver in the dollar. It's opposed by the yen. So we got flows out of the dollar yesterday, and they were predominantly going fairly equally into the euro and the pound, with the yen staying fairly static in a state of dynamic equilibrium. So minus 29, a little bit weak, but fairly static. Right, over the week, so these are the intra-week flows, we've got a negative driver opposed in the dollar again. Right, so we've got significant flows out of the dollar all week, going into predominantly the pound and to a lesser extent the euro, with the yen being on the soft side as the negative rock. Now, and so far today, the most recent flows, we don't have that situation anymore. We have an opposed positive driver in the dollar. It's opposed by the euro. So we've got positive flows finally going into the dollar, and the opposing negative flows are mainly, as expected, coming out of the pound and the yen. Right, so what's going to knock all this around today? Well, just a bit of context. We had the Bank of Japan suggested they were going to do further support to businesses, and analysts were touting that this was the reason for yen weakness. However, that is maybe a very minor reason, but the main reason is a positional one, which we can talk about later. Right, so today we've got UK retail sales, tier 2, German business expectations, and CAD retail sales. On Monday, just over the weekend, we've got China's rate decision. Now, regarding the German data has been pretty good for the last 2 weeks, so if we start seeing a chink in the German data, then that will be interesting. But at the moment, it's punching away quite well. So let's make some decisions then. Get off the fence, as it were. Right. Now, so as you know, as I've just said, we've cleared out the majority of our positions. We've cleared out all the pound longs. We're 20% long over a significant number of trades, 38, and we've got some short swings running in the dollar yen and the euro yen. Now, so we're actually going to close out those at some point today, and close our books for the year. So that's just to let you know we're just looking at the last knockings of that. So anyway, so let's see then. So this week basically we've been banging on about going long dollar yen and euro yen, and it has been pretty ugly most of the week. It's been tough, undeniably so. But depending on how you've been trading it, as to how mashed you've got. So now we expected, as I said, we expected the pound to come off. So we expected pound weakness off the back of the positioning and the fact that we've got this rates decision. We had it yesterday, and it was a natural peak in the pound, with the dollar being predominantly, the pound strength was being predominantly driven by dollar weakness, and we were expecting the pound to drop off the back of dollar strength, and the dollar strength didn't really materialise till very late. They were giving the dollar a hard time all week. As you can see here, it was the opposed negative driver. So that scenario was slightly flawed, but the yen scenario, which was off the back of equity rises. The equity rises happen, but the yen weakness was problematic, particularly against the dollar, which because the dollar was falling faster than the yen. So that's the reason we had a struggle with the dollar yen trade. Now, and that leaves the euro. That leaves the euro, which we thought was basically going to be on the up in terms of the yen, particularly. So that's where we were this week, and we're actually starting to see this scenario play out this morning. So finally, I mean, it's been a long drag. You're starting to get dollar strength, a little bit of euro strength. You're getting the first signs of yen weakness despite the equity rises, and you're starting to get this switch out of the pound as the dollar rises. So this is actually the scenario we've been banging on about all week, and it's only really just starting to happen. So we're going to hang in these dollar yen, euro yen long trades for the rest of the day, until we just clear everything off and say thank you very much, Merry Christmas. So that's what we're going to do. So we will be looking for further rises in the dollar yen and the euro yen off that scenario. Now we're going to obviously do the weekly review this Sunday, but we're not going to actually do daily briefings until, when is it, Monday the 4th, which is the start of the real trading after in the new year. So we're going to be not doing these briefings until Monday the 4th of January 2021, but we are going to do a weekly review for the week that we haven't done the daily briefings for as well, just to keep you up to date with the flows and the stats. And we're also going to push out some so-called educational content, probably do some more on the psychology and how to trade it series. So I hope this helps. Thank you for your support on all the rest of it so far, and look forward to seeing you again soon as. Thank you.